Welcome back to the Mike Bates Show. This is Mike Bates. So on Wednesday morning, the Bureau of Labor Statistics released the Consumer Price Index figures for April 2021, and they showed a leap of a whopping 4.2% over April 2020. It was the biggest annual jump since September 2008 during the financial crisis. Now, some economists tried to shrug that off as an invalid comparison because 12 months ago, we were in a pandemic shutdown. Never mind that in many blue states we still are. But even the month-to-month CPI increase was 0.8%. And if annualized, that would be a little over 10.03% increase. And that month-to-month gain was the highest in 40 years since 1981. So I think it is irrefutable that we are experiencing the inflation that we knew all this reckless government spending would one day bring about. So the question is, what do we do about it? And so with me on the line is Tim Frye with Roberts & Roberts Brokerage, because he is, in my view, an expert on money and particularly precious metals, which I think are a good hedge, but we're going to find out from the expert if that's the case. Tim Frye, welcome to the Mike Bates Show.
Thanks for having me, Mike. Always appreciated.
Well, thank you for coming on. And I do want people to know that Roberts & Roberts Brokerage is a sponsor of this program, but that's not why he's on today. He's not paying for this interview. I'm asking him these questions because I know he has knowledge that I think you will benefit from hearing. So, Tim, are you in agreement that inflation that we knew would one day come has finally arrived in full force?
Well, I do believe that inflation has arrived in full force. Inflation is always a monetary phenomenon. There's been an increase in the money supply, an unbelievable increase in the money supply, certainly since March of last year. And the high prices are an effect of that. So saying that high prices are an indicator of inflation is to say that wet sidewalks cause rain. The money came first. The prices are rising because of all of the money sloshing around in the markets.
And just how much of an increase in the money supply have we seen?
There's two numbers that are tracked, and I'm not making these numbers up. These numbers are coming straight from the St. Louis Federal Reserve's website. They have a tool in there called FRED, Federal Reserve Economic Data. And I'm looking at a graph of the M1 money supply. And the M1 money supply is all the money that's in just circulation. So it's things that aren't tied up in long-term savings accounts, bonds, loans, things like that. It's just money out in the wild, if you will. Since the beginning of the pandemic, since back in March or April of last year, we have risen from about 4,000 billion or $4 trillion to almost $20 trillion as of April 27th of this year. So I'm pretty sure we're probably well over 20 trillion by now. So that's an increase of $16 trillion. It's 4 times the amount that was already in circulation.
And is that mostly a result of the 3 very large coronavirus relief bills that Congress passed? That totaled
yes.
4.8 trillion right there.
Yeah, absolutely. Along with things like the unemployment benefits that are being doled out as well. Not just the federal additional amount, but the amount that states are putting out and other types of programs.
So what does all that extra money do? It's my understanding, Tim, that the textbook definition of inflation is an increase in the money supply without a corresponding increase in goods and services.
That's correct.
So what does all this extra money do? Why does that in and of itself create inflation?
Well, the first place we see it is we see an asset inflation happen first. So you see prices of houses go up. Then you see people saying, well, I want to make my house go up. I'm going to do some remodeling. And then you see prices of lumber go up because of the demand for lumber. And you see prices of copper go up because of the demand for extra electrical wiring and pipes and things like that. So it starts out like that. But then we start to see it creeping into prices. And I've been doing most of the food shopping in our home since last year. And I've probably seen about 30% increase in my food. And when you look at CPI, that 4% that they're talking about, that doesn't cover food and energy. They've jockeyed the CPI numbers so it leaves out food and energy because they're too volatile.
Yeah, and when you look at commodities, and I did this Wednesday after the CPI numbers were released, I looked up a handful of commodities, and I want to share them right now because they're really shocking. And I'll tell you up front, every one of them is well above the 4.2% that the CPI officially increased. And here's what they are. This is the 12-month increase. And let me acknowledge that 12 months ago, many of these were at very low prices. They were in a dip because of the pandemic. But these are all also still, despite that, now at historic highs. So when people want to dismiss it as, oh, you're comparing it to the trough, well, yes, it is, because that's the legitimate comparison year over year. But they're still at record highs by historical standards. And here they are, Tim. Crude oil up 143.5%. Gasoline up 55.2%. Diesel up 25.5%. Coal up 84.2%. Copper up 84.3%. Steel up 120.5%. Aluminum up 69.8%. Lumber up 162.2%. Beef up 30.1%. Poultry up 77.7%. Wheat up 12.7%. Corn up 48.6%. Sugar up 76.5%. Milk up 20.8%. Coffee up 40.3%. And cotton up 52.2%. Those are massive increases, Tim.
Indeed.
And we haven't necessarily seen that at the consumer end yet. Remember, consumer price index. The C stands for consumer. These are producer prices. These are the wholesale markets of these commodities. So inevitably, if the wholesale prices are going up by these double, in some case triple digits, is that not eventually and probably pretty quickly going to also show up at the consumer level?
Yes, without a doubt. But where it won't be reflected right away is in wages.
Right, which makes it even more difficult to pay those higher prices.
Exactly.
So what do we do about it? You know what? Let's do this, Tim. I got to take a break. Let's take a break. When we come back, I'd like you to answer that question. What can we do to protect ourselves from that very high inflation? We'll get the answer when the Mike Bates Show continues. Welcome back to the Mike Bates Show. This is Mike Bates. With me on the line is Tim Frye. He is the owner-broker at Roberts & Roberts Brokerage. Primarily, they focus on precious metals, but he is, in my view, an expert on money and what money is and how to protect yourself from the rising inflation, which is why I asked him to come on the program today. Tim, we established in the last segment that, yes, we are in an era of inflation, which is likely to be higher inflation before long. What can people do to protect themselves against that?
Well, you can start off by selling things you don't use, get money, buy less stuff that you don't need. But also, part of your savings program ought to be getting out of this inflating dollar. And of course, this is the part where I'm going to tell you to buy silver and buy gold, but it has always worked against inflation. Gold mirrors the damage done to the dollar, and silver does the same with an ability to trade. Those are some ways of doing things.
So does the value of precious metals like silver and gold always rise as inflation rises?
Yes, it does, but it usually lags it a little bit. So you get a bit of an opportunity before it goes parabolic. This could very well be that opportunity. I hate to shill my product, but that is certainly one protective measure you can make.
Well, you're not shilling your product. I think this is valid advice. And full disclosure, I bought some gold and silver from Tim earlier this week. So I obviously believe in what Tim is saying, or I wouldn't have invested my own money into gold and silver. So some questions, Tim, in terms of the price of silver and gold going up as inflation goes up. Once it does, you said it lags a little bit, but once it does catch up, does it tend to then parallel the inflation rate, or does it increase faster than the inflation rate normally?
Well, again, it depends on what you consider to be inflation. If it's a rise in consumer prices, it lags it. If it's the actual pure inflation, the actual monetary damage, then it would be just about alongside.
And so if precious metals are a good hedge against inflation, how do you recommend that people do it? Bars, bullions, coins, rounds?
Well, right now we have an effect where the precious metals prices of products that you can take away and hold as an investor actually are higher than the price of the spot metal. This is due to demand, people jumping on this before somebody else does. And the producers haven't been able to keep up. And it's caused a rise in the price of the physical coins and bars. I'm recommending people buy the least expensive thing now because some of the premiums for things like silver American Eagles and gold American Eagles, which are very popular in America, it's the most popular product we sell, have gotten a little bit ahead of themselves, I think. So I'm recommending people buy things like privately minted products like silver rounds and silver bars, and maybe some of the lesser government minted coins from foreign governments such as Canada, South Africa, Austria, Australia are perfectly fine. They're all 1 ounce silver pieces and contain the same amount of intrinsic value. They just don't have the high premium that things like the gold and silver American Eagles have.
So if people can buy the South African Krugerrand or the Canadian Maple Leaf or the Australian Kangaroo or the Australian Philharmonic, if it's the same amount of metal and it's pretty much the same intrinsic value, then how come people can buy it for less? Why is there a higher premium on the American coinage?
The popularity of the American coinage has caused an overall shortage for starters. And so that has driven the price per unit up. People will pay more. It's harder to get them. We're having to pay people when they bring them in. We're paying more than we ever have for those items now. And that drives the price up as you sell them back out again. The other ones are lesser popularity, but contain pretty much the same thing. The advantage of having the kind of the American product is it is American. We're Americans. We understand America. We may have more trust or we put more credibility. We have better recognition for the Eagles.
But the sophisticated investor, I mean, I can kind of see what you're saying, that if the apocalypse happens, right, and we're truly in a terrible situation where we are trading gold and silver coins for a chicken and a propane tank, I kind of understand, well, okay, give the American coin because everybody knows it's American. But under relatively normal circumstances, with a relatively sophisticated investor, don't they pretty much know that these foreign coins are of equal value intrinsically?
Yeah, they would recognize them immediately. And I think that if you went into a situation where we're actually having to, heaven forbid, swap or barter with these metals, then people will learn pretty quickly how to detect real things. I mean, they have a distinctive sound and characteristic and feel, and the weight and the dimensions and all that can all be ascertained.
So if people object to paying the premium, well, first of all, you got to pay a premium always, no matter what the market's doing. You're always going to pay above spot for that kind of coinage. But how much concern should people have about that premium? And I guess a better way to ask it is, aren't you going to get a premium when you sell it also? Sure, you may pay it when you buy it, but aren't you going to get a premium when you sell it?
Well, yeah, as I mentioned, I mean, I'm paying higher than I ever have for things that are put on the desk, that people need to sell. So we are paying higher now. Over time, as the price catches up to the premium, which I think is what's going to happen, is you might have to pay $33 right now for a silver round when the advertised or spot price of silver is $27. I truly think that the silver price will eventually catch up with that premium. And so you'll still get $33 for your coin and more as the price climbs higher.
And so if somebody is buying it as a long-term play, because I don't think you recommend getting in and out of gold on a month-to-month basis, right? I mean, even you acknowledge that this is a long-term hold, right?
It is a long-term hold, yes.
Okay. So that brings me to another question. And you and I have had this conversation off the air, but I think it needs to occur on the air because it really is kind of fascinating to me. And I hope that our listeners will also find it to be very valuable information. And that is which to buy, silver or gold. And you had explained to me this historic ratio of silver to gold, that typically it's about 20 to 1. 20 ounces of silver is equal to about an ounce of gold. But now it's more like 67 to 1. Does that mean that silver is cheap by historical standards and therefore would have a greater likelihood of increasing in value quicker than gold would?
That's certainly the silver trading strategy. So we see gold at its price. And you're right, 15 to 25 has kind of been the historic natural relationship between gold and silver. So it would take 15 to 25 ounces of silver in the past to buy 1 ounce of gold. Currently, as you said, it's in the 60s, mid 60s right now. So it seems like you're getting about 3 times more silver than you ought to be able to for the price of an ounce of gold. Now, we've seen these ups and downs in the ratio in the past. And when it does catch up, we do see people swapping that silver, bring in 30 ounces, get an ounce of gold. So there's that aspect of things. The other reason I kind of like silver is silver has been in its history, it's been to nearly $50 twice. So it's about halfway there right now, a little over halfway there. Gold has only ever been above $2,000 once, and that was just last August. And I think it'll probably breach the $2,000 mark again this year easily. And silver, from this $27 price, it wouldn't be hard to believe that it could double because it's been pretty close to that twice. Gold to go to $4,000, probably a little bit less likely. So I think that your investment potential in silver probably outweighs your investment potential. Gold is great for store value and for matching price with the dollar. Central banks around the world, sovereign wealth funds, government treasuries, all store gold to hedge against currency. And so the price of gold is almost always right compared to US dollars. We look at it in US dollars here. So if you watch that silver to gold ratio, I think there's some play to be made in there.
And I understand that they don't move in parallel. I get that. Sometimes one goes up, the other goes down, a little bit of this, a little bit of that. But why would there be such a huge difference? I mean, it's about a threefold difference now. If it's normally 20 to 1 and it's now 60 to 1 or thereabouts, silver would be 1/3 the price, or gold would be 3 times too high, whichever, or maybe a combination of both. What would cause such a huge elasticity in that ratio instead of it being fairly constant?
Well, some of it's demand. I mean, if you're a national treasury, you're obviously soaking up a lot of gold right now. Silver is not something that investors or treasuries invest in just because it is so difficult to move it and it takes so much more space to store than gold. It's just not practical for them to put billions of dollars into silver. So silver does lag a little bit. Nothing about mining has changed. It takes just as much effort and energy to pull silver out of the ground as it always has. It takes just as much energy, maybe more now, to pull gold out of the ground. So it's the lag of silver buyers coming into it. There's probably also a little bit more, I hate to sound conspiratorial, but there is manipulation in the silver market. I've experienced it firsthand. I know how they do some of it. So I think those are the factors, is that you're seeing a much healthier appetite for gold by the people that print their own money and buy stuff versus the people that have to make money and buy stuff.
So my last question on the precious metals, Tim, because I want to ask you about Bitcoin as well, and we're running out of time. But my last question on the precious metals is, if the silver and gold are good investments so that your money in the form of precious metals rises with inflation, or hopefully slightly better than inflation, does it tend to then stay that high? I mean, is this a good long-term way that if the inflationary pressure drives up the price of precious metals, that it will at least stay above that inflationary amount versus necessarily, and I realize everything's supply and demand, but versus the demand amount of upward pressure?
I would say gold does a better job of that, but because of this ratio difference, you buy silver now to obtain gold later. And you need to kind of pay a little bit of attention and divide the price of gold by the price of silver. When that number starts to reach into the 30s or at 30, I would look at swapping out of silver and getting gold. Bring 60 ounces of silver in and get 3 ounces of gold, where today you could only get 1 ounce of gold for that kind of money.
All right, so I want to wrap up with this conversation, Tim, and I know you don't sell Bitcoin. You're not a Bitcoin broker, although you do accept it as payment. But what's the deal with Bitcoin?
What's the deal with Bitcoin? I'm very much very positive towards Bitcoin. I'm not so positive about a lot of the other coins that are out there. And I know that people like to play them like a casino, and I can understand that. But the thing about Bitcoin is you have a remarkable new currency that cannot be inflated, that is secured by literally hundreds of thousands of operations around the world, based on open source software that we can all look at and see whether the rules are being followed. Even simple folk like myself, I'm not a computer nerd or genius, but I do run a Bitcoin node. So I run the Bitcoin software. I verify every transaction that happens in Bitcoin is an honest and truthful transaction, that nobody's increased the supply. And I think that it's remarkable that you can do that. You cannot do that. How many times have we heard audit the Fed? You want to audit Bitcoin? Right there. Just go look at it. And so I like that aspect of it. It is limited to 21 million coins. There will never be more than 21 million Bitcoin. The fact that things can't be inflated. If somebody wants to use Bitcoin to get a project done and that project benefits them in some way, we all benefit. It's like The condo down the street got built by a builder. If they do it now in the current market, he borrows the money to do that, but they're not using your money in the bank. That's why they pay 0 point nothing in the bank. They create new money out of thin air, give it to the contractor to build it, and then all the people that buy the individual units borrow more money that gets created out of thin air, and that makes your money even more diluted. And that's why you're not getting any interest at the bank. And then they get enriched, but your money actually dilutes. With Bitcoin, if they wanted to go do the same thing and borrow Bitcoin to do that, it would raise the value of all of my Bitcoin as Bitcoin gets more and more scarce as they want more and more Bitcoin. And so the value of my money increases under a system like that. A limited currency supply is key to a civilized society.
And the money supply certainly is not limited because we create fiat money all the time. And even gold and silver, while it may not be created, it's constantly being taken out of the ground. So I suppose the supply of gold and silver is increasing. But you're saying
it is, but it's a very it's known how much gold, and the price of gold will also control how much gets taken out of the ground. If the price of gold shoots up to $2,000 this year, there'll be more gold mining, and more will come to the supply, and it will dampen the price back down a little bit. Same thing with silver.
So might Bitcoin be a decent hedge against inflation?
Yes, absolutely. And I don't sell Bitcoin. I do own Bitcoin, but I do not sell it. I do accept it as a form of payment. I don't know why anybody would trade Bitcoin for gold, but people do.
Very interesting. I still don't fully understand the whole Bitcoin concept. I probably need to look into it because I don't own any of it, but it sounds to me like I probably ought to own at least a little.
Well, I mean, it's pretty simple.
All right. Well, Tim, we are out of time, but I do want to give your contact information in case people want to buy some gold or silver. Again, Tim doesn't sell the Bitcoin, okay? But if you want gold or silver, I do recommend Roberts & Roberts Brokerage for that. His phone number is 850-478-5270. And online, it's www.rrbi.co. Tim likes to joke that he'll save you having to type the M. It's not .com, it's .co, rrbi.co. Well, Tim Frye with Roberts & Roberts Brokerage, thanks so much for joining us today on The Mike Bates Show.
Again, thanks for having me.